Good morning, everyone. I'm your host, Sejal Thakkar. Thank you for joining us on this exclusive Nobody Studios live stream series. And today I want to welcome back two remarkable individuals, our Chief Nobody, Mark McNally, and Karl Schlegel. He's been an excellent addition to the studio. You'll get to meet him today as well. Welcome back, you both.
Thanks, Sejal.
Thanks a lot, Sejal.
Karl, you know, when you were talking at the meeting we had a couple weeks ago about your no-brainer investment equation, I was literally messaging you at the same time saying we need to get you on the making of a nobody because it was just something that I felt would be super helpful and valuable to everybody that watches this live stream. So to get us started, can you tell us a little bit about your role at Nobody Studios? And
Sure.
you know that I love asking the question, what drew you to this journey?
Absolutely, Sejal. It's a pleasure to be back with you and great to be with everybody here today. And Mark, it's been exciting seeing how everything's been evolving. So when it comes to the studio, I've really been focused on how can we drive traction faster in the market, get these companies to be able to get off the launch pad even faster. And instead of thinking about it from a do-it-yourself type of mentality and we have to do everything internally, how are we able to leverage strategic partnerships, plug and play strategic partnerships, not reinventing the wheel, to be able to create win-win value propositions between existing companies that are already in market, helping everybody to get to where they want to go even faster. And that's what I've really done across my career, which has covered venture capital, family office, mergers, acquisitions, technology, and has brought me onto a lot of different adventures in a lot of different areas. But every single time it came down to not just one individual, but the biggest challenge is everything really came back down to a team mentality and the notion that business is a team sport.
Yeah, and for those of you, so I had Karl on the Nobody Studios Culture live stream, and we went in deep on the whole plug and play philosophy that he incorporates into everything he does. So make sure you check out that prior live stream. It's on our YouTube channel. But Karl, what drew you to the Nobody Studios journey? Tell us that.
Absolutely.
I love hearing what draws people to this adventure that we're all on, right?
It's my father had said growing up, it was all about business is all about people, right? Life is all about people. Life is all about relationships. It takes time to cultivate relationships. So in that fashion, it was so appropriate that Kyle Kane and Jason Kolker, whom I worked with on other projects, shared with me what was going on at Nobody Studios. And I've been following a little bit about what was taking place, seeing the traction, seeing the force multiplier. And I also went back and was taking a look at some of my own notes from adventures over the years, from business ventures I've been involved in. And it hit me like a light bulb. It almost felt like this returning moment and this opportunity to be able to do something amazing with a fantastic team. One of the things I was speaking with a colleague of mine about who's in the mental health space, I said, it's really amazing. And the clarity is there between times where you have that alignment and you're not questioning what are each other doing. You're not checking up on each other, but you just know that you're in such synchronicity and you're working together as one unit. Nobody's really keeping score, but you are progressively moving toward a goal. And that's how it's felt with Jason and Kyle on other adventures together. And so it was really exciting to say, wow, what's going on in Nobody Studios? Look at all these people that are coming here. And if people are the force multiplier in making things happen, there is an absolute Avengers type of team here. And finally, it's not just about the people, but it's also about the attitude of people that they have toward each other. Are they going to respect each other? Are they going to seek to really help and to support? Or are they just going to beat their chests and trying to shut out the world? And that was the thing, finally, that the culture that's been created at Nobody Studios, that leave your ego at the door, but bring yourself fully into the equation and bring everything that you have collaboratively. That's what really drew me to Nobody Studios.
Oh, that's awesome. And that just takes me back to when I joined the studio, right? And I think about this first conversation that I had with Mark, often as I'm kind of reminding myself, like, what's our vision? Where are we going, right? And one of the first conversations I had with him, it wasn't even on video. It was actually a phone call. And we were talking, he called me and we were talking about the studio and he was telling me about some new codes they were building. And really what you said is the culture. and the vision that he had for the studio. And at that point, I didn't know a lot about him. And so, I went to LinkedIn because I spent way too many hours on there anyway. And I started reading all of his posts that he had put out there. And he was posting all of these blogs or just like his thoughts on the making of a nobody, which is the name of this live stream, right? And one of them, I'm going to put it back up here. I'm going to try to see if I can share it here. This one, when I read this one, which is really the what and why behind Nobody Studios, it really caught my attention. And so Mark, I just want to put this up here and just have you kind of talk to us about this is what you, and this was, by the way, before I even joined the studio. So I joined about 3.5 years ago, and this was something he had posted. And again, so Mark, I would just love for you to elaborate on some of these points that you made in this post here.
Yeah, first of all, I appreciate you making the story of how we met a little friendly, because you usually tell it like, I thought this guy was crazy.
No.
But
well, I still think that sometimes, but
perfect. No, you should just the right amount of crazy. I mean, for you coming on board, I remember the funniest thing was I was saying I really need a chief cultural officer, and you're like, dude, I love your vision, but I can hear your dog barking in the backyard. Like, you have like one employee, you don't need a cultural officer. I'm like, you don't know how big we're going to grow, you don't know how fast this is going to happen, and culture is key. The number one thing that can take us down is culture. We don't get to do it after the fact. We have to do it from day one. And that was where we, I think, really resonated and started talking, okay, so if you were going to build something right from scratch, what would it look like? And I'm very fond memories of going back to that. But people do credit, I think, our culture and our team and their people as one of our strengths right now. And I guess I just cite that as a example that it's not an accident, right? And it's, I had a little bit of vision and experience that drove us a certain direction, but what it's become has been something I've said often. We were always going to be defined by the people we attracted to our journey, right? At the end of the day, the people, their talents, their passions that said, yes, that resonates with me, and I choose to come here and put my talents and my relationships to work here. That's a gift. That's our rocket fuel every single day. And I also think it's just a fundamental part of like the law of attraction. We never tried to change our story to get certain people. This is who we are. This is what we stand for. And the right people came to us. Right. And Karl's a great example of that too. So glad to be on a call here with Karl. Karl's a star. But he's a great example of also how the studio has worked. I mean, I think I met Karl in the earliest days of the studio, probably 4 years ago. Certainly had a positive impression, strong interaction, but there wasn't an obvious, clear fit. I think he popped in and out 2 or 3 different times in other calls where there was, a connection or something we could help each other with. And I started to pick up on the energy. Of course, I knew that he had a background with Kyle and Jason, but just started to see the intellect, the energy. And it was always what I tried to do is like a pay it forward kind of mentality, very positive, lean in, let's figure out what can be done. And it was like probably the 4th or 5th of these serendipitous calls. I was like, I'm really looking for a senior executive to run biz dev, and Karl is like feeling really good to me. So we're fortunate to have started that conversation and now have Karl a huge part of the studio as we move forward. So
thank you, Mark.
Thank you. What can I say to your question, Sejal? I'd say one of the things I am most proud about is that if you go back to my earliest writings about what the studio is going to stand for, or even look at our very first deck from 4 years ago, or listen to me on a podcast, or read this stuff like on LinkedIn, our story hasn't changed. And I'm proud of that, because there's something that is really fundamentally at the core of what we're doing, and is that we were at the root of, for me personally, 27 years of startup experience. I know why I think what I think. I know why I have strong convictions, and it's usually documented by multiple failures or scars and maybe a success along the way. And at this point in my career, which became the thesis for the studio, I'm not willing to relearn things that I've learned the hard way before. And I'm going to try to help my team at least make that the starting point. But what that's translated to is who we are, what we're trying to accomplish. We're not chasing the latest buzzword. We're not chasing where the market is this moment. We really truly believe that building companies fast and frugally and aggressively, having a global, perspective, incorporating, people first mentality, so that you're really sharing the rewards with everybody in the team, making sure that people are part of something makes them actually part of everything we create, not just the NewCo they're involved in, and also offering that same upside to all of our investors so they get upside in everything that we create. We just think that some of those, and the global nature of our view, all those things are fundamental cores to who we were when we started. And it just becomes stronger and stronger every day on why those things are who we are. But I'm proud that there's been moments where crypto is really huge and people are like, hey, why don't you just pivot a little bit towards and say you're crypto? I'm like, because if you know anything about our journey, I'm not chasing buzzwords. We're going to be the tortoise in this case. We're going to be methodically pursuing our vision and our values, and the market has come around. One of the big things we said when we started, which was very unpopular 4 years ago, I went out and said, people trying to build unicorns are crazy. And that was when you're like seeing a unicorn minted every day. It was only like 10 years ago, there was like 5 unicorns, and now there's like 1,500. And as that started to grow, people are challenging us like, you're crazy, man. You're on the wrong side of history. People are making, billions of dollars. And I'm like, well, the market hasn't corrected yet. And when it does, it's going to be very, very painful for a lot of employees. And it's going to ruin a lot of value for a lot of investors. I'm sorry that's going to be the case, but it will be the case. And now it is the case. There's 1,400 unicorns raising capital. Most of them are laying off employees. The capital they'll raise will probably be a flat or a down round, meaning the investors are getting wiped out. I mean, we've had a lot of investors call us in the last, 6 months to 12 months saying the things that you guys said 4 years ago, I thought was tone deaf and out of line with the market, but everything you said was going to happen. And so, again, proud that we have a compass. We know what we're trying to do and why we're trying to do it. And it comes down to our core values and culture and our thesis. But we haven't been chasing, the latest buzzwords.
Thank you. Yeah, I know. And I go back and when I look at your posts from before, it really is fascinating to see how this journey is unfolding. And so this was the one that jumped out at me. And I'll just add, when I was reading all of your stuff, Mark, at the beginning, and trying to really understand where you wanted to go, for me, impact is everything. Is what am I doing? Is that contributing to a positive impact on the world? And that was something that comes up over and over again in all of your posts. It's all about making that impact, right? And we're not just talking about the small wins, but really just sort of global impact, right? So that all of that stuff resonated with me. So, Karl, I want to really get going on this conversation. And the question I wanted to start off with is, that vision that you heard Mark just talking about, right? In order for us to get there, we need to build that momentum, right? We need
absolutely
to figure out how to strategize and build these relationships. So what are some of the common challenges that early stage companies face in your experience when they're trying to build that traction and momentum?
Sejal, I love how you use the word momentum, and I'm actually preparing a post on the physics of strategic partnerships. I was working with my daughter the other day, talking about the first law of motion and the law of inertia. And once she got it, right, an object at rest tends to stay at rest, an object in motion tends to stay at motion unless acted upon by an unbalanced force, right? That was the definition that they were giving there. And once she got it, it became more than the seatbelt. It became when I'm taking a step, when I am, clenching my hand, when I am opening my eyes, right? That there's this whole force. And I think in business and in entrepreneurship, one of the hardest things is just to start getting going, right? And so you're going out there, you're trying to find product market fit. You're just trying to have conversations with people. If people will give you the time of day, you're trying to have a conversation because you're saying, I think that there's a pain point here, but have you been able to really zero in on the pain point, right? So that inertia. In fact, I'm wearing purple, but for me, purple has come to represent the combination of blue coming from flow, the combination of red coming from power, and that combining to create energy and the way in which energy gets channeled and how that opens up possibility. So partnerships, when you start taking a look at, okay, I can do it myself, and this could take a really long time. Or what if there are others that are actually serving clients in similar types of markets that aren't actually competitive to me, but they have a lot of the different types of clients that are already there, or they are already servicing and providing a solution that, if I scaled up later on, I could turn to them. And if I had a lot of revenue and demand that's coming in, you know what? They would love to be able to help me, right? And so when starting to take a look at relationships, taking a look at the existing business landscape, and instead of taking a scarcity mentality or a dominating mentality, taking a look at it from a collaborative standpoint, saying each company, each person has their own unique value to be able to contribute. So let's not get wrapped up in this game of following somebody else's business plan from a competitive mindset. How are we able to open up new opportunities? How does disruption become something that isn't just about taking away, but this is about transforming, right? And so I saw partnerships throughout my career. When I was in venture capital, they didn't even ask me, here's your mission, should you choose to accept? They just said, okay, besides the relationships within the VC and bringing in funding, you're also going to roll up your sleeves next to the management teams and be able to help them solve challenges. I said, awesome, great. What are the challenges we're looking at? Well, we've got a company here. It's publicly traded, and it's about 5 years out from FDA approval for being able to increase the efficacy of Tamiflu against H5N1. Oh, and by the way, they also need to speed up clinical development worldwide. Your job is to do both. Figure it out, right? Like, they didn't even give me any instructions. But what that opened up was the realization of, A, I don't have the network, et cetera, et cetera, et cetera, all the different subject matter expertise in the given area. But what can I do? How can I go out there? So I started going to different events. I started speaking to people in my network, and that opened up the solution. We brought in Lanza Chemical Company to create a line of cosmeceutical products to compete with MV Paracone MD. And then we connected with former GlaxoSmithKline executives, and we're able to address the ability to speed up the clinical development. Where later on, when I had a client that then said, well, through 2 acquisitions, we've gone from delivering continuing medical education to doctors and nurses sponsored by pharmaceuticals, which we helped put together a partnership, my business partners and I, before I worked at the VC. Well, now later on, it leveled up to, we now have the only online HIPAA compliant platform for the exchange of electronic medical records. Well, how are we going to do that? Well, again, going back to the people equation, and we got to deal with Microsoft Health Vault, but we also did that by reaching out to an executive openly, honestly, and inviting a space for collaboration. I think that's the big thing about the 6SP flywheel, is that there's strategic partnerships in 6 different categories, but when you put them all together, it becomes very powerful because it shifts, it creates momentum, and it attracts the market. People now want to see what you're up to.
Absolutely. And Karl, what you're saying is definitely resonating. There's people signing on. And I just put up a comment that came in with Daryl. Thank you, Daryl, for joining us. Collaborative innovation is key to mutual success, right? And so this is a perfect segue into, I want to share that slide that you had presented at that meeting, which, by the way, I'm still digesting and trying to understand. So this is my opportunity to learn some more about this, because there's so much on here, but so many words on this slide caught my attention, right? Demand, the no-brainer investment, the flywheel. So maybe you could just break it down for us and give us a quick explanation of what this is and how it applies to early stage startups, like, products or services.
Absolutely. Absolutely. So one of the things that you find in every deck across the board is what we call the TAM, SAM, SOM slide. This is the slide that is saying this is what the addressable market looks like, the total addressable market, the service addressable market, and then the service obtainable market looks like, right? And this is where the company is usually trying to justify there's enough of a market out here. If I just get enough clients, then this is going to have a big valuation. So I would stop people when I'd be on the side of pitch competitions as a judge or, someone who is providing some feedback. And I'd say, okay, just hang on a second. How exactly are you going to do that? How are you going to go and capture this revenue that you're talking about? And the first thing that they would say is, well, we're going to use influencers, we're going to use SEO, we're going to use marketing campaigns. And I go, wait, hold on, stop. So what you're saying is that if we give you capital, then you're going to apply this capital on a whole bunch of tests to be able to hope that you actually achieve this. And then we reset the equation. We say, okay, let's take a look at the relationships that you have, the relationship capital. A lot of people take a look at resources, but what they don't actually take a look at are the people that are around them, the people that want to support them, right? And by taking a look at revenue, servicing capacity that we talked about before, market positioning, and market positioning has to do with differentiation. How are you telling that story, and how are you backing that story up? Is technology going to be part of the differentiation of your story? Is something in the press going to be part of the differentiation of your story? This is where influencers can come into play, right? But understanding that in context, advisory board, it's not just about who you know or what you know, right? But it's about who knows who you know, right? So when you show up at the table and you're the company and they're going, great, so you want to do a case study or you want us to buy your product, and you don't have anybody who has the credibility from that industry, that immediately works against you. So how do you bring the right people to the table with the network, with the experience, with the enthusiasm for that vision, right? And then we take a look at data value. Now, in a post-COVID world, before COVID, digitization was kind of on this slow curve. I remember running artificial intelligence SWAT teams, being in a major bank, having a conversation with them when they were just trying to talk about real-time data. I turned my laptop around and they said, whoa, that is real-time data, right? But forget artificial intelligence, machine learning, this thing, that thing. Now we've got this whole age of AI. But what's really happened after COVID is the realization of the disconnect between documents, data, and systems of record, right? And how do you put that back together? And I was fortunate to help to automate mortgage certification for one of the largest banks and document custodians as part of another team, and be part of a patent that could actually track and analyze worker performance on blockchain. So that brought me close up to seeing data value. 90% of the data was being dumped, 10% was being held onto, but 100% of it could be a liability or an asset. What were you going to do in that area? And I believe that data value is actually something where there's a massive opportunity to shift exit strategies, to shift multiples. If we want to see something that's really going to shift the way in which companies and their exits and the valuation show up, data value is a key area to take a look at. It's either an Achilles heel or it can be a rocket ship, depending on the way in which it's managed, which then brings us to valuation. Okay, what are you doing, again, that can back up the investments that you've made, that you have all these little marks for traction in these awards, but how does that actually impacted your valuation? Have you taken a look at strategies that, just like real estate is an appreciating asset, have you done things that create an appreciating asset for your brand in terms of media? How are things kind of showing up? So when you bring all of this together, and revenue, just going back to that for a second, the way I like to look at the revenue partnerships, it's not I'm going to take from you. It's how do we come up with something that is a compelling shared vision that is more powerful than either of us individually could have alone, right? And the way I like to look at the revenue partnerships is it's all about these ecosystems. So you could know where the fish are in the stream. You could put your line in and hope what you can catch, or you become friends with the person who controls the dam, and you create an opportunity that unlocks and opens up additional opportunity for that company and ties into what they really want, not what you want, what they really want. So they see in the collaboration how this can really make a lot of sense. Now you go back and take a look at this and you say, demand. So what's the revenue that we stand to take here if we're taking a look at the service obtainable market, or even now looking at our relationships? How can we soft circle a number around this minus the capital that we're looking for equals a 2-year investor ROI? Now, a lot of companies like to see break even in 2 years, profitable in 3. After 2021, which was a boom year for the venture capital industry, a lot of LPs, limited partners, have not re-upped with the venture capital firms. So there's been a crunch in the capital space. And now it's not just about the good story. PitchBook, Kaidi Gao from PitchBook recently said in an Inc. article, you need to back that up with financials and real traction, right? So how are you backing that up? Well, let's just take a simple equation. $2 million in demand minus $1 million in capital equals, so now we've got $1 million. Okay, so we took $1 million in, we've got another $1 million coming out. Can we be able to make that make sense? Well, if you're taking VC capital, they want a 10x minimum. So now take that $2 million minus $1 million times 10, 2 minus 10 equals -8. Wait a second. Are we going to be able to be there? So this equation helps to be able to take those relationships, the network, just like we have at the studio, we have a very influential network, involve those people, engage them, incentivize them, and now all of a sudden create a flywheel for success where the no-brainer part comes from. I had investors that would say, you know what, if you could pay me back in 2 years, plus a certain interest on this is a no-brainer, right? And that's ultimately, that's a very bold goal, but being able to get there where we're taking money in and we're able to exit them out in 2 years, plus their interest on top with a 2-year runway based on the flywheel coming out of the studio, that's a very different type of position to be playing in the market, which attracts the market, which makes the investors want to actually come in, stay longer, not leave, support you. So it just shifts the way in which, instead of taking a look at how to jockey against each other, how are you able to even create alignment around that flow of capital and around that ultimate vision and where you want to be able to get to, even on the investment side?
So fascinating. And you covered literally, in 15 minutes, less than 10 minutes, you covered enough for an 8-hour masterclass.
Yeah. I'm sorry. Could you repeat that again, Karl?
Glad we have the recording. I hope.
You were on mute the whole time, Karl. Dang. Can you do that again? No. I love all of that. And so what advice do you have, Karl, for entrepreneurs and founders that are watching right now who are looking to implement, this formula or the strategic flywheel in their own ventures? Give us some advice, practical advice for them.
Absolutely. So I think, culture is so critical, but we even go back to that North Star. What's that compass? Mark was talking about it before. What are the mission, the vision, and the values? And a mentor said to me, when you have the clarity around your core values, and they shouldn't be more, than 5 of them. Sometimes you want to get them down to 3, but you really want them to be so clear and crystal that this determines the kind of people that you hire, where you have your offices, who you choose to partner with, right? That clarity of what those values are, what you're willing to do, what you're not willing to do, what you're willing to, take a risk on, what you're not willing to make a compromise about. I love how Mark has set those lines very clearly for the studio. Hey, nothing against certain business models and industries. That's just not where we're going over here. Here's where we are going. We'd love for you to be able to come along, right? In a no judgment kind of way. So the mission, the vision, the values, and then be clear on what that win-win is for each company and put metrics around it. You need to be able to quantify it. But if you do that without creating a forward-looking vision of a successful partnership and working backwards, where you actually create a mental picture, you feel that experience. You've just stepped off stage. You've just, been honored at the TechCrunch Disrupt. You absolutely killed it. And now what's going on? How are you feeling? And then start working backwards. How did you get there? And how did the partnership come into play around that? And how are people they can't wait. The engines, they're literally racing each other off of the starting line because they're so excited about what they're doing individually as well as together. So you need to really take a look at what does the partner need? What is it that they want? And connect with them, not just on the business front, but connect with them on the personal front, on the relationship front, on the things in life that really matter, where you can really establish trust. And don't take those partners for granted. There have been statistics about strategic partnerships not working. And I've personally seen you could have the biggest deal on paper and the wrong people involved in the room, tear up the paperwork, walk away, because you're just wasting your time. But if you have the right people working together, it's kind of like that mustard seed that all of a sudden grows into a great tree. If you have the right people working together, then literally sky's the limit, galaxy's the limit, universe the limit, because anything could be possible.
Karl, man, I thought I woke up with a lot of energy today. I messaged you ahead of time and said, watch out, but I feel it through the screen here. And so do everybody else. Bryson Patridge just put in the chat, BAM, and he capitalized BAM. Nice work, Karl. And then Andy wrote, Andy Walsh, I'm so glad to have Karl on our team. He thinks on a level I don't. Andy, I think most of us know he thinks on the level that Karl does. He's got his own thing going on there. And then Daryl, he made this great comment too. I just wanted to highlight, Daryl, I know that you and Karl worked together in the past, but appreciate you joining us anyway and supporting us. But I love this comment. He said, when 90% of funded startups fail, and 36 to 95% of new products fail. Key to success can be strategic partnerships and or lots of funding. And he went on to add, flexibility is key. Rigid companies and deals sometimes die. Win-win is key, right? So great engagement from a lot of people. Mark, do you want to add anything to Karl just unloaded a bunch on us. So do you want to add anything to that?
Yeah, I mean, first of all, the inviolate agreement, love the energy. I think strategic agreements, what I always tell people is like, if you're trying to do something special, look to have a unique angle. Like, let's say you're building a marketplace, or you're trying to do buying something and selling something transaction, and you're in the middle of it, right? I always tell people to have a unique angle. So you can't tell me you're in the middle of someone buying and selling something if you don't have like a lock on the supply, or you don't have a lock on the buy, right? Or your brother-in-law owns the factory that makes the thing, or you need to have some unique angle, preferably a unique angle on both. And that tends to be a very strategic relationship, or an exclusive, or some kind of, other kind of relationship. I think that's super key in strategic relationships. I think a lot of people in strategic relationships do window dressing. Let's do a deal, let's announce we're partners, and it sounds good, you get a press release. Those don't get me out of bed, and I won't let us do those things. I'm looking for true strategic alignment where someone's like, okay, I'm going to do something unique. And I think the way I've always taught people underneath me is to think of it as like, in a marriage or in a business partnership, you want to have people who bring strengths that you don't have, right? Because once you have that, you're like, wow, I couldn't do this without you. And we're able to do something together we couldn't do on our own, right? And I think that's the bar that I always want to be looking at, and how you've actually, the language you use and how you frame something, right? One of my best examples is like 25 years ago when fiber optics became a thing. There was a race to see who could become fiber optic from coast to coast. And everybody was like, doing it the old way. Okay, I'm going to hire more people and put up posts and dig in the ground. And, they're all racing to be the first one to announce that they got coast to coast. And a really creative telecommunications company looked at the problem a little bit differently and said, what is currently coast to coast? And currently what's coast to coast were petroleum pipelines. And so one of the things you do to clean petroleum pipelines, there's this round ball they stick in the pipeline called a pig. And pigs go and clean out the pipeline. They just literally stick it in, and it goes through the pipeline instead of oil, and it cleans out the pipeline, and then they put oil back in. And someone said, well, what if we attach fiber optics to the back of a pig? And within half a year, they had a coast-to-coast fiber optic network. And so that, to me, is an idea of someone who's in the telecommunications space calling somebody from the oil gas industry and saying, I've got an idea. Together, we can do something really freaking special. You can't do what I do. I can't do what you do. But together, we can do something special. To me, that is like the core of what it makes a really good, strategic partnership. And then I'll just make a comment on Karl's, slide around the good investment. That is part of how the studio thinks, is like, build companies frugally. We are optimized for mid-stage exits. So we don't think, hey, let's build something that we've got to, raise a bunch of money and maybe in 10 or 15 years it could work. We're always trying to say, can we build something special that has revenue, that is self-sustainable, that early exit opportunities are available to us, even if we don't take them. We'll have a lot of companies that we turn down exit opportunities and grow it to the moon, right? But my best story of that, I was part of a startup company that took public when I was 25. I was the number 3 guy in the company. So I remember being in, boardrooms with literally the managing directors of some of the biggest banks you can imagine when we were doing our secondary offerings. We already went public. We already done our IPO. And we're really proud that we had this plan to get profitable within 2 years. Super proud. And I remember this very well-known person at a very well-known bank, very prestigious, laughing at us and saying, you guys are amateurs. You guys need to burn money for 10 years. Don't come back in my room until you show me a plan to lose money for 10 years, because then I will know that you're aggressive enough and you're really going to be a winner in this market. So we did. And about a year and a half later, the market blew up, and that person was being interviewed by Wall Street Journal saying, yeah, we made a mistake. We bet on a bunch of young, not me personally, but overall the .com boom. They're like, yeah, the problem with the dot-com boom is we made a bet on a bunch of young, inexperienced people, and we won't make that mistake again. But they were the drivers of it, And so I think back then it might have even been kind of rational to think that way. Today, it's impossible to think that way. The speed of innovation, the speed of technology, you don't even know the disruptions that are going to hit you right between the eyes tomorrow. You need to be very focused on a finite market, adding value, building a team, building disruptive technology. If you have an opportunity you have to build revenue so it's a self-sustainable company. You can't depend on future, raises or some mythical IPO. And then if you get an opportunity to have a reasonable exit in a mid-stage, as long as you've kept your cap table reasonable and you haven't raised too much, that can be a great outcome for employees and a great outcome for investors, and you get to go back and do it again. And that was my 2 inputs to Karl's rant.
Love it. And we're at time, but I love all of that, Mark. But I wanted to just, Karl, if you can really quickly address this question by Bryson. I put it on the slide. He said TAM and demand can be very different when you're a new solution in niche markets, but how do you address and disrupt those markets? Is this something you can answer quickly?
Yeah, absolutely. Even in the progressive model, we really take a look at embracing the 0 to 1 mentality from Peter Thiel. Where's that one clear market where we can just be able to drive so much value? And then from there, we can move into different markets. So in progressive, we're actually narrowing things down. And that allows you not to get into this whole global possibility and it gets spread all over the place, but being able to get really clear, where's the pain point. You understand that inside and out, and then you're able to drive the scalability. And that's also where those capacity partnerships are really key. I once had a CEO say, if we bring in all this revenue, how are we possibly going to fulfill it? And we said, well, you could look at it from an internal standpoint, or you could look from the outside, and even go so far as, why don't you put an option, put some money down so that you're locking in the capacity for the future, in being able to do this should that type of situation arise.
Awesome. And Daryl made a comment about protecting IP and how that's so important. So Daryl, you got to take a look at Evalify if you haven't already taken a look at one of our new codes that we're building right now is Evalify. That's built already. And so take a look at their website. That's what that whole new code.
Well, Sejal, just to quickly say, Daryl actually was first to file with the Google, what became Google Glass patent, and Fitbit, and even earlier stages of a social network. He set a record against Thomas Edison in terms of patent filings, first patent filings. So he has done a lot of stuff. I'm looking forward to seeing where he might be able to play into the studio as well. And it's done some amazing things, really challenging open innovation with the Disneys of the world and with others in that space.
Okay. Perfect. Yeah. Daryl, we'll reach out to you. I got your email right here. So definitely would love to connect you with the Evalify team. Karl, you're probably already on that. So thank you everybody for joining us. Paulo, great to see you here too. He said, nice to listen to your vision about early exits. Obviously this episode live stream resonated with everybody. So thank you everyone for joining us today. Obviously you could see that we're passionate about making these disruptions happen in a progressive way. So if you want to learn more about what we're doing at the studio, please check out our website, and we'll be back at the same time next week with another guest. So we'll see you next week. Have a great week, everyone. Bye.
Thank you, everyone. Thanks, Sejal. Thanks, Mark.
Thank you, Karl. Great seeing you. Thanks, Mark.
Great seeing you as well.